Siddhartha Khemka into the discussion now. He's a head of retail research at Motilal Oswal Financial Services. Siddhartha, hi, good morning. So many stocks to talk about, but I first want to start with Mahindra & Mahindra because the management was very confident at the investor day and at, the discussion that we had with them as well. Of course, the stock has done very well, but there's a big target price upgrade that's coming from Jefferies this morning. I wanted your thoughts. So for someone who's perhaps missed out on the rally in M&M, does it still make sense to buy it here?
Yeah, very good morning, Sonia. Glad to be on the show. So if you look at, I think the management sounded very confident on the overall business strategies. There has been strategic focus on capitalizing on the market leadership in its core automotive as well as the farm business, unlocking potential of some of its other large business, which is M&M Finance and Tech Mahindra, and also looking at some of its gems that they identified last year and taking it a 5x, five-fold growth over the next few years. I think overall, the focus on capital allocation has helped in the last few quarters and years, especially with the improvement in its core business. I think valuation-wise also, given the growth as well as the newer businesses, we believe that it only shows on to show that how M&M has kind of transformed in the last 3-4 years, especially on the prudent capital allocation practice, which had been one big ask from the investors community. So I think overall we still are positive, and there is still room for upside given that they plan to launch new products in the auto business. EVs is another place where the penetration is going to happen. They intend to launch 7 new EV models that would also gain market share there. Valuation-wise, as I said, it trades at about 20-22 times, which is kind of comfortable and gives us some more room for upside. Currently, we have a buy with a target price of 3,300, but looking at the improvement in the farm equipment business, expected good monsoon, I think the momentum in M&M will continue.
Okay, all right. Hi Sid, morning and good to see you in. I wanted to ask your view on HAL. The MOD has issued an RFP for procurement of 156 light compact helicopters. I think part of the street was waiting for this. The stock has as is been a big outperformer, but your view on HAL at current levels?
Yeah, Nigel, good morning. So I think this is a structural story that will keep playing out. We'll keep getting these news flows with regards to the high order book that these companies will keep winning, be it on the domestic side from the MOD or the recent focus on the exports. So I think, yes, the stock has rallied in the past, you can say 1 or 2 years, and is trading at a very high premium valuation. But with this strong growth anticipated, and you have very few limited companies to play this defense space, which are so large in size, I think that premium would continue. See the kind of order that they have gone, a 50,000 crore order. There was no one else who bid for this tender. HL was the sole bidder, and they got the order. So I think this will only go on to strengthen their long-term positioning within the overall defense space.
Got it. Siddharth, let's go back and talk about what we were just discussing, which is this Paytm and Zomato deal. Actually, my question is more on Zomato. Dream rally for the stock, right? It's up 50% in 2024. It's up 150% if you look at the last 1 year. What do you think? Is there further headroom? Clearly, things have started improving, but the question is valuations and the runway, growth runway that you are factoring in. What are your thoughts?
Yeah, Surbi. So I think definitely there is a lot of room and runway for growth in Zomato. These things have just started turning around. As Nigel and Mangalam were discussing some time back, the street would not have been that positive. But if you look at what happened when the acquisition of Blinkit happened, the street punished the stock. The stock from its IPO days had fallen. And from the bottoms only, the stock has risen back to now above its IPO price. So I think if you look at the talks for this discussion, it is only complementary to the existing offerings. If it goes by, it will be another positive for Zomato. We don't expect a strong cash outflow for this acquisition. It will only strengthen the offerings for its Zomato and its Zomato Gold membership, which will only strengthen. So I think growth-wise, pretty much strong growth improvement in your PAT margins, return ratios from single digit. We are expecting about early double digit return ratios by FY26. And earnings wise, from a low base, it will be a very strong earnings. So we still feel there is upside to the stock. Currently, we have a target price of 220, but I think with this news flows and once that gets confirmed, further upside can be built into the stock.
So Siddhartha, let me get your views in now that earnings season is over. You know, a lot of companies, I mean, we just heard about Jefferies raising their target price on M&M and raising their earnings estimates as well. What has your overall takeaway been? Any stocks where you think earnings upgrades are likely to take place and perhaps one can still buy into them? What does your basket look like?
Yeah, so Sonia, I think, yes, the earnings cycle has been pretty good, and even Q4, the earnings was much better than our expectation. And on back of that, we have only raised our estimates, earnings estimate for the next 2 years as well. So Nifty, if you look at what we are expecting now, marginally increase, we now expect Nifty earnings to grow about 16%. 15 to 16% for the next 2 years. And some of the key stocks, if you look at the index heavyweights, which have kind of contributed and could see further upgrades. So we have SBI, Tata Motors, HDFC Bank. These are some of the stocks where we believe that the upgrades could be even stronger compared to what the street is expecting. And among them, SBI is something that figures among the top. It has achieved a new milestone in FY24, crossing the 600 billion rupees PAT profit, and we see the balance sheet strengthening, NPAs reducing to 0.5%, and the company is expected to deliver a 16% CAGR in terms of loans growth, in terms of earnings growth also, and return ratios improving. ROE is at 1.1%, ROE is about 18.5%. So among the stocks within the heavyweights, SBI is something that we like. We believe valuations are comfortable. Tata Motors is another one where we believe earnings could see more upgrade. And among the laggards, HDFC Bank is the third one.
Okay, so those are some large cap names that are on your radar. Got that. Siddhartha, what's the view on OMCs now? Anyway, keeping those stocks on the radar because crude has moved up quite substantially. But what is your take on the three? There's also a lot of talk, of course, yesterday, last week, gas stocks were in focus because there's some buzz around gas being, now incorporated in the GST framework. So just thoughts, oil and gas and topics?
Yeah, Sulbisa, I think, yes, oil and gas is something that has been doing well. We have a positive view there. Some of the OMCs are doing well in terms of earnings, as well as there are a lot of other developments. For example, both HPCL, BPCL will be having their bonus in some time. That is also something that the street is liking. The windfall tax has been reduced. That is another positive. And we believe any movement, shift in the tax regime to GST, that will be also positive for the entire oil and gas space. So while we continue to like the OMCs, our preferred pick within that is IOC, followed by HPCL. In the gas space also, we continue to like GAIL, where we believe the expected robust demand with gas transmission volumes expected to reach 132 MMSCMD by FY25, and we expect a steady 10 to 12% earnings growth over the next 2 years. So that is something within the gas space. So we like IOC within the OMCs and GAIL from the gas space.
Okay, all right. Final question, Sid, before we let you go. IIFL Finance, they came out with their set of numbers. They've raised some capital as well. What's your view on this counter?
Yeah, so I think IIFL, some concerns have been there on the latest development with the RBI thing, but I think results are more or less decent. There has been a PAT miss due to the MTM losses on the AIF investments. Gold loan ban has resulted in 5% fall in the gold loan AUM. But what we see is that management is now saying that it is compliant with all the RBI observations. The special audit commissioned by RBI has been completed and the RBI review is awaited. So the company expects any positive development soon, which should be a trigger. Stock trades at a good valuation at 1.2 times FY26 price to book, 8 times P. And the only concern is that we need to understand the magnitude of the rundown in the gold loan portfolio, which will impact the financials for the current financial year, given that the ban is not has not been removed. Barring that, we continue to have a positive view. We believe the stock could do well. The core business is doing well, and once the ban on gold loan is removed, I think the street would again start liking the stock. So maintain a positive view on that IFL.
Okay, Siddharth, thanks a lot for that. Well.